afternoon, traders. Welcome to the TMT Stock Market Strategy video for Thursday, November 17th. Yesterday was a quiet day. We had an inside day, meaning that the daily range was inside of the trading day from the previous day. So really there was no volatility. There was absolutely no new money coming into the market. So the market stayed within a range. Very, very quiet day. To sum it up, the market has been very quiet within a daily trading range. Every day the market would either gap up, then like it did after the election, pretty much every day, and it stayed within a range. So the daily ATR, average true range, was really minimal aside from the gap up. So that's how you really want to take a look at the day. Not by looking at a daily chart, you'll see, oh wow, we went up every day. Yeah, we did, but the most of the move was done on the opening. So very quiet day, but I do think between now and the end of the year, which gives us about 5 weeks, 6 weeks maybe, that we're going to see an expansion of volatility. Now, I want to go over the dollar. Here's the UUP weekly chart, and you can see I posted this many times before. Here is a weekly chart of a big bull flag, right? You can see the flagpole, you can see the flag itself. Now, we did break out. Now, the thing is this going to be a full-fledged breakout, right? Now, here's the swing high that we really need to take out, okay? That is on the weekly chart. More than likely, when you gap up like this, you usually come back and test the upper end of this trend line area. So today is only Thursday. We are down today based on comments from Bank of Japan last night, talking about how they're going to buy an unlimited amount of bonds, driving yields lower. That could put a bid into the bond market, at least in the short term, and I'm going to show you where I think bonds, or at least the TLT, which is the 20-year bond ETF, where it might go. Okay, now that's the weekly chart. Here's the daily, and you can see here, this is where that weekly pivot high is going to be that needs to be taken out. Now, we did take out these two areas. So I had a first target, second target, and now we have the third target that needs to be taken out. Now, that might halt, at least in the short term, the dollar breaking out. But I do think that the dollar has legs to go even higher, and that's going to put pressure on, obviously, gold, the precious metals, crude oil. But that needs to be taken care of and watched closely. Now, here's a TLT. And what I did was I had, if you remember, guys, I had from here to this high, that low to that high, to see where we might look to go. Right now, we're going to go from high to low to see where we're going to go on the reverse, meaning that where we're going to bounce back up. And you can see here, this coincides nicely with this little consolidation, and that's what I like to look at when I'm doing Fibonacci retracements, to see where the clusters of price hung out, if you will. And here's a 76% retracement, which coincides nicely with this little area here from this descending triangle, right? So 38%, I'm looking for a gap fill in this area. Remember, more than likely, 99% of all gaps get filled. So I am looking for a gap fill here and here, and then once this is filled, we resume the downside, because I do think that yields have made a generational low, and I do think that that bonds are headed much lower, but not until, I think this was a quick move, and I think that you're going to get a couple of big moves in the bond market as far as the retracement rally is concerned. Right, here's silver. I'll take a look at silver, and this is again from the premium video. Oh, by the way, we had a great webinar yesterday, and thank you for those of you who came out. A lot of nice, kind words. Phenomenal webinar. We also have recorded, so if you're looking you want to see the recording, please feel free to email us at support@tradingmarkettechnicals.com, and just put on the header webinar recording, and we'll send it out to you ASAP. Okay. Anyway, here is the premium video that we put out, and you could see, guys, our subscribers, if they wanted to sell SLV, anytime you get a bounce into this area of resistance, they'd be selling it, and that's something that if I took this off, you wouldn't really notice this. This is really an easy do for areas of resistance to sell, and buy areas, support areas to buy. Okay, and this is the SLV, and I do think that this does go a little bit lower. Look at our volume profiles here. We're below this area of supply, which is now resistance, and I do think that we get one more push in the precious metal sector. which is the GDX. Here's the gold miners, again looking for that 76% retracement to hold here around 17, 18 to 20 is what I'm really looking for in GDX. Next is going to be GLD, and again, as you know, here's that thin zone that we were talking about. We really need to see this thing hold, otherwise I think we get an area right up into this area, if not even this area here, which would be the January lows of GLD. So looking for our second target, and then we would reevaluate it. I will not be looking to buy GLD, not just yet, not after 2 or 3 days of just hanging here at the lows. I want to see our momentum indicators, RSI, MACD, start to cross back up to the upside. Yes, we are oversold, and yes, we could bounce here, but we did this here. If you remember, we did the same here, and then sure enough, we sold off hard. 60-minute, I just want to show you guys what we have here was just inside day. Nothing happened yesterday. You could see we just went up and down. We just bounced around doing nothing. So everything here, you can see MACD and stochastics and RSI are really flat. So we're looking for an expansion of volatility, and hopefully we get it today. Russell 2000, again, inside day. Nothing really happened here, but there's massive explosive moves happening in the small cap arena. And lastly is our Qs, again, inside day. So we're looking for some individual plays. That would be a great idea. So let's start looking for some scans. A lot right now of the indices are just pausing, looking for a bigger move, and I do think that's going to happen. I don't think, as we get closer to December, and if we don't get an expansion of volatility, meaning that a big move to the downside, that may not happen until January, unfortunately. But let's, again, take it one step at a time. Have a great day, guys. We'll see you tomorrow. Take care.